Hello and welcome. As global markets witness euphoria and really a historic cheer for the US China trade deal and clarity there emerging, what does this really mean going forward for the world's two largest economies, for global trade, for gold and oil prices, and for India in particular? Well, to decode all of this, I'm joined by Senior Economist Mitali Nikore. I'm also joined by Senior Market Analyst Chokkalingam, and I'm joined by Nasser Salim, Senior Market Expert. Thank you all for your time. Mitali, for those wondering, what does this mean for the world's two largest economies and for global trade? What would you say?
Sakshi, we've been tracking this entire story around the tariffs since early April. And we've been seeing that, the US administration over time has used these tariffs in some ways to negotiate a better position for itself when it comes to at least reducing its trade deficits. So I think that is one objective that even these talks, they kind of reflect that whether you are dealing with China or you're dealing with any other country, these tariffs have been an effective tool, unfortunately, an effective tool, in my view, unfortunately, of course, not for the US administration, but overall, we've seen that this has led to a situation where now, today, US and China can sit on the table and say, we know that trade is good for both our economies. There are large companies like Shine, for example, which have been completely exempted from the tariffs, even in this 90-day pause period. So it's well understood that consumers in the US will bear the brunt of such high tariffs, which nobody wants. The current US administration does not want, and also the Chinese. A lot of their business is also dependent on US consumers. Nearly 15% of overall exports from China are destined for the US. So this is a trade relationship that benefits both economies. It's very good to see that they've come to a point and they've said, okay, now for 90 days, we are going to pause these 125 and 145 levels, bring it down. We're yet to see what exactly is the level to which they're bringing it down, even for these 90 days. And overall, it's expected that after these 90 days, we are going to see a trade deal emerge between the US and China. And I do think that that is going to really change the terms of engagement between the US and China. They will engage much more as equal economies because when this entire relationship began in the 1990s, at that time, China was just looked at as a poor cousin, to the US, where a lot of the dirty manufacturing would be outsourced. But today, the Chinese economy is like a global powerhouse of manufacturing. So I think even the Chinese will negotiate certain amount of investment, certain amount of exports. But overall, we will see both the countries be better off as a result of this deal and the global economy be better off because we will avert large amounts of recession. The risk of recession would now be reverted. And that is why we see the markets cheering because they see the two largest economies in the world speaking to each other, resolving these differences, and moving towards a path where you can see maybe greater collaboration as well instead of this competition that is currently going on.
Absolutely. So you say, of course, this will be better for the global economy. G. Chokkalingam, do you agree for global markets also? We saw a massive rally on Wall Street. We saw Asian markets extend those gains today. So do you see this also being a big upbeat and a big positive for Asian markets? And is this just going to be in the near term or also in the long term? Because remember, as we were explaining our viewers, this is a tariff deal, but after the 90 days, there will be a fresh rethink or a reset. So what should investors brace for?
Yeah. So in the short term, it is a big positive for major markets like US market and Chinese market, and even for the global economy because till few days ago, the United Nations Trade Organization mentioned that the global trade would dip in 2025 calendar year, in contrast to nearly 3% growth in 2024. So to that extent, it will contain the deflationary conditions in the global economy and it will normalizing the trade between China and US is definitely good for US and Chinese market. So that's a strong implication. But other implications are not that great for India. When world economy suppose deflationary conditions are there, yes, Indian economy also impacted. But I have been always saying that the global pain has some gain for India. That was proven in Lehman crisis, COVID time, every time. That is in terms of cheap oil price. Now, if you see in the last 1 week itself, oil has bounced to 8% global oil price. So, this normalizing trade between China and US is going to prop up again the oil prices. So to that extent, Indian economy would be affected. And second, the Indian market also may be affected indirectly by this trade deal because, if you remember 2 months back, there was a report of a lot of allocation shifting to China from the FIIs away from India. Now there is a chance that India would become a serious competitor with the Indian. China would become a serious competitor with the Indian market in attracting the FII money. Obviously, because this is a big deal for China. So this is the third implication. Fourth one, it also has implication for gold. Gold should take a back seat in the short term. Because normalizing trade and robust economic outlook would prefer equity asset rather than gold asset. But in the short term, but in the medium to long term, the gold may remain steady for one more reason, for two more reasons. That one, some of the central banks like Chinese central bank and all underexposed to gold, and on the other hand, the BRIC currency is also going to take a hit now because of the political realignment, and therefore economies like China and others, they can swap gold for dollar in their forex reserves. So therefore, gold would take a backseat in the short term at least. But in the medium to long term, it would bounce back. So these are the four
Right.
implications we see.
Right. Nasser Salim, do you agree? Of course, we have seen gold prices ease already. We have seen oil prices surge already. Of course, there was a lot of uncertainty with the world's two largest economies hitting out at each other, tariff after tariff, and raising those percentages, really. So, your thoughts on how this will impact markets, global markets in the near term and in the long term, as well as what does this really mean for India then going forward?
Good afternoon, Sakshi. Wonderful to join you back on your show. So, two, three key points, and I completely agree with my fellow panelists. Number one, I think, the reduction in tariffs will likely result in surge of US-China bilateral trade in high-value segments, right? Such as electronics, machinery, and chemicals. And, the point is that it is disadvantage India in the medium term to short term, right? Because India can leverage the shift to strengthen exports in sectors that remain relatively insulated as far as US-China trade is concerned. As I said, pharmaceuticals being one of them, pharmaceutical APIs, gems. I can think of jewelry, engineering goods, organic chemicals, and IT-enabled services. Some of those, for example. And the point is that this deal currently does not address the underlying issue, such as the high trade imbalance between both the countries, Sakshi, between the US and, which was the main bone of contention that POTUS wanted to bring about. His main grouse was, and that was in the first place, was that we need to address this high trade imbalance. This obviously can have adverse implications for India, for them getting into an agreement. I think the tariff gap narrows, and companies that had shifted production to places like Vietnam, India, or Mexico may return to China now. So this entire China plus one strategy that we've been talking about, Sakshi, may now quietly fade away. I mean, that's one risk that we feel that India might kind of witness. Ironically, this deal also comes undo the very diversification point that the tariff war aimed to spark. So that's another big challenge that we feel. Also, the lower tariffs between US and China, Sakshi, could result in a reprieve from the dumping of Chinese goods that countries like India and Vietnam have faced, and we've kind of tried to protect ourselves from against, right? So I think broadly, short term to medium term, it is disadvantage India. But I still feel, if we are smart enough to, quickly get onto our opportunity, as I just mentioned, sectors that remain insulated from the US-China trade deal, we can possibly, be a little advantageous. But short term to medium term, it's definitely disadvantageous.
All right, Mitali, last word to you then. Many believe, of course, in the near term, this is a big upbeat as far as global economy, global trade, global market reaction is concerned. But in the long term, then, strategically, things may not change much, is what the fear is.
No, absolutely, Sakshi. I mean, I can hear the market experts talking about the disadvantage that India may have. But I wanted to just go back to one point which I made just 2 months ago, which is that we should not be a trading economy where that should not be our aspiration. That today we have, a higher tariff in X market and a lower tariff in Y market, and let's take advantage of that arbitrage. I think India has to aspire to be a manufacturing and services driven economy where what we produce is world class, and what we produce is not even sold just to the US but also to China, but also to other countries. And we have that competitive advantage in a number of sectors. Pharmaceuticals has been cited as one, but there are a number of other sectors as well. Textiles is another one of them where we have given competition to the global giants. So at the end of the day, our aspiration as an economy has to be to, add that kind of value. And also we have to look at the services sector much more seriously. We have to look at, how Indian companies can continue to work with the American counterparts and build on the artificial intelligence services. Because, we know that the IT sector is already seeing the decline in its revenues. And that's only going to be made up if we are as good as the Americans when it comes to at least servicing based on the AI, technology that's available, even if we don't develop our own LLM models. So, having said that, I think a strong global economy is good for India. And disruption in global trade is one part of it. But the fact that two large economies in the world can work out their differences, can have more economic stability, is overall in the long term good for India.
Absolutely, of course, highlighting that dialogue can bring clarity and conclusions. Thank you all really for sharing your thoughts, and of course for decoding this market mood globally, as well as how this will pan out for the world's largest economies, as well as global trade for our viewers.